All right, Yield Nerds, episode 104, and I call this the Three Fat Cats in a Herd of Starvin Marvins, and I'll tell you why I called it that very, very soon. Thank you for subscribing. We are up to 254. I'm very humbled that there are that many people who care to follow, and I appreciate the comments, the emails that you've been sending as well. And since the email was sent privately, I'm not sharing some of those contents, but there have been questions asked about certain concepts, screeners, other equities, and I would remind all of you that for those of you that are new to the show and find some of the topics to be a little beyond where you started, I want to remind you I started much more naively and taught myself. So feel free to follow the playlist, and most importantly, remember that I am just as naive as another person down the road. So do not believe what I say. Check anything on your own. Well, 2024 brings a very interesting backdrop. The red party and the blue party need to work together to cook the money vat that keeps our economy alive. Plus, it is an election year, so there is more posturing than usual. And there is some level of cooperation lately, which excites me that maybe there is a real future going on. Having said that, it is mostly two parties coming together to kick the can down the road a few weeks at a time. I hope there is more collaboration in the weeks to come. I still worry about April 30th. That is when the 1% cuts across the board will kick in. And so my mind goes to keeping that as a very, very big day for risk removal, at least for me. Having said that, what does Q1 2024 look like? In my mind, the rate cut in March is no longer a thing. That means short-term treasuries are still the way for me. Geopolitical tensions are not easing. If anything, they are increasing. Some kind of soft landing is being talked about. I'll let you be the judge. Who am I to say whether it is or is not there? I'm about to go into some specifics of my portfolio. Please remember this is not investment advice, not tax advice. I am not a wealth management advisor. I don't do politics. I don't have t-shirts and merchandise to sell. Well, I kind of got curious and looked at the 5-year returns of each sector in the market. This was done using Schwab. I compared the overall S&P with each sector by itself. How amazing, and I did not put IT in here for a very specific reason. The communications sector is the one that is dead on arrival. Outside of that, everything else is up between 30 and 50%. So all you had to do was buy the sector indices, sit tight, and wait for 5 years. You would have made 50%. How absolutely amazing. It does surprise me a little bit that we are sitting here thinking we are 30% better off. The economy is 30% better off than the depths of COVID, but who am I to say that? But once you add IT to that picture, it is beyond stunning. If all you did was own the IT sector for the last 5 years, you would be up 220%. Whether you think that the value of technology is more than twice what it was 5 years ago, is up to you. I would like to see these based on fundamentals. That is my real problem. And, left to me, the P ratios of 40 and 50 and 60 are just silly. And so I am not a fan of those kinds of valuations, but that is what the market believes in. Even if you looked at year to date, just for this year, which only barely a couple of weeks have gone by, you could sit here and say the entire market has been up 1.5%. But if you look at the stars of the market, and hence the moniker the three fat cats, just Microsoft, Nvidia, and Meta, just those three are responsible for 80% plus of the reason why the market has gone up. Do the math. Just those three are propelling the market forward. The other 497 are not. So you can sit here and say soft landing. It seems to me that it is a huge takeoff for three and no landing for 497. And if you look at the individual weightings of the S&P, those tell a story between Microsoft, Nvidia, and Meta. Even though the weighting is low, the volume is so high that when the S&P shows us up on some days and down on some days, it is those three stocks that are driving it. Astounding but true. My Slowpoke portfolio is barely moving. It is up 0.13%. Ho hum. And my screeners do not pick up anything new, and I refuse to buy things because, the market is saying that three stocks control the world. So my trades in the last week and a half-ish are very nondescript, mostly treasuries. I am stocking up on a couple of FHLB and FFCB bonds. There is an FHLB that pays 5.5% for a 5-year term. I fully expect this to be called, but I'll take 5.5% until it is called, is more the rationale. Other than that, you can pretty much see I'm not really buying anything else. There is a preferred stock I picked up for a really, really small position. But outside of that, I did get rid of Gilead Sciences today, and you may have seen one of their drugs tanked, and the stock is down 10%. But I had owned them for 3 years, and so I sold it at a profit, and I turned around and took whatever that proceeds were and bought that FHLB bond at 5.5%. So that is really what happened. Roll back another week, nothing really happens. It's just again a bunch of treasuries and some dividends. So my 3-month strategy is to stay the course. I am not chasing these three fat cats, not my kind of trading. I'm gonna sit tight and keep making the 5.4% state tax free, or hey, if you give me FHLB, I'll take 5.5%, which increases duration in the short term for me, but I'm fine. I'm a little worried about geopolitical risks, the two-party risk, the election year risk. So I'm just sitting here chipping away at returns while I wait for possibly some kind of a yield event or just time to go by. Short and sweet episode. Thank you for listening. I don't want to fill up your time if I didn't have any change in strategy. I don't have change in data, so I don't have change in strategy. That is me. Remember, even a blind squirrel can find a nut once in a while. I don't know if this is the right or wrong strategy. Would love to hear back. Thank you and have a wonderful week.